Hi everyone, Nathan Robert here. We got a lot to cover in this video. We'll be talking about the Trump tariff cancellation. I know that's kind of yesterday's newspaper. We won't spend too much time about that. I want to show you some stocks that I think are cheap right now. We'll touch on NVIDIA earnings. I bought a brand new stock for the first time ever today. I'll share with you the brand new holding I just bought today right before this. And also, I made some major changes to my Roth IRA. So hey, if you like this kind of stuff, please drop a like on the video for me. It really helped me out. So first, in this video, let's talk about the Trump tariffs because initially this morning we came out with the news that the courts found that Trump's Liberation Day tariffs are completely illegal, and that means the universal 10% tariff, like even the tariff on China's fentanyl, the 10% fentanyl China tax, or tariff, all these are going to have to be taken away. And that really is bullish for the market. But look at that. So we really rallied on that news this morning. Then the market's kind of sold off. And I'm looking at my portfolio, same with the S&P 500. Like we were up 1.6% and then we fell to just 0.3%. Trump did come out and appeal this, but I think it could be like the perfect excuse for Trump to say like, hey, look, I tried to get these tariffs down, but the court stopped me and I tried to appeal, but they didn't let me. And so maybe Trump will just stop with the tariffs and all, which it should be great news. And I think the market kind of foresaw this because at one point, the S&P was down 15% year to date. And then we kind of recovered with just like 30-day, 60-day pauses. We didn't really get any new, like great news. And part of me thinks that the market almost kind of knew about this. Maybe I don't know, because we've had a great rally the past basically 1.5 months, and there's been no real explanation for it. But hey, I've been enjoying it. Our portfolio's done great the past month. We're up 9.93%. So anyway, I think that this is overall bullish for the market. It can't be bad news. But anyway, I want to talk about now NVIDIA's earnings. So the stock is up 4%. A lot of their metrics missed, like the automotive business fell year over year. Their gross margin fell by 10%, but they actually blame this on China, completely on China. And they're actually right to do that because if we look at their next quarter guidance, this is why I think the stock is up 4%. They gave guidance for next quarter of 2% growth. And that's not great for NVIDIA, but that excludes the H20 tariff impact where the US isn't going to allow NVIDIA to do that. They excluded that from the guidance. And when you add that guidance back in, the year-over-year growth rate would have been over 20%. So I think that's why NVIDIA is rallying so much right here. And NVIDIA actually just released a brand new product. It's called NVLink Spine. And the company that actually benefits from this is actually ticker symbol APH Amphenol Group. And I think this is why the stock has ran up so much. A lot of their demand for their product, like they had crazy 40% year over year growth. And a lot of that was from this right here. So here's a quick video of what this actually is. This new NVLink Spine can actually move more data than the entire internet. It allows GPUs to communicate with each other way quicker. And it has over 2 miles of cable. Just check this out right here. This is going to really benefit Amphenol Group.
2 miles of cables.
2 miles.
5,000 cables structured. And it connects all 72 GPUs to all of the other 72 GPUs across this network called NVLink Switch. 130 terabytes per second of bandwidth across the NVLink spine. So just put in perspective, the peak traffic of the entire internet is 900 terabits per second. This moves more traffic than the entire internet. One NVLink spine across this 9 of these NVLink switches, so that every single GPU can talk to every other GPU at exactly the same time.
So Amphenol Group makes the highest quality copper cables. They have just spools of virgin copper cables in their facilities. And this new NVLink Spine, with 2 miles of copper cables, they're just going to be in such demand. And I think that's why this stock has just gone crazy right here. If we look at their communication solutions, which is their interconnect cable business, it's up 43% from the previous year. That's incredible growth. I think a lot of that might be from NVIDIA. And check out this right here, their harsh environment solutions cables. These are also up 39%. So this is just an insane growth company. And the growth is just expected to keep on growing. Look at this. The revenue was up 47% year over year. That's incredible growth. And I think that's why this stock just keeps on going up. I'm glad I dollar cost average ended them down here. I think it's a little tough to buy them now. The risk to reward looks not great on them, but I can see why they've done so good. And also, if we look right under Amphenol Group, I'll be quick about this one because I want to make a whole dedicated video about this stock. But the newest stock I actually purchased, I've never previously owned this one before, is Coca-Cola Consolidated. It's not the main Coca-Cola, but this is the bottling company. They also bottle for some Monster beverages and some Dr. Peppers as well. But this stock right here is a great valuation is 17 PE. If you kind of look in the middle there, 17 PE. The market cap's only 9 billion. So very, very mid-sized company that has a lot of room to grow. And look at the dividend. You get a 0.5% dividend yield, but look at the payout ratio. It's literally a 5%. Apple has the same dividend yield, roughly a 0.5% yield, but their payout ratio is a 16%. So Coca-Cola actually has a third of the payout ratio, but the same dividend yield. That's because of their low valuation. And that's why I think even though this one's had a lot of stock price appreciation, I think there's more room for this one to grow. And I think the reason the stock fell so much on their new earnings report, they don't do earnings calls, by the way. This is a niche company. The CEO owns 70% of the voting rights of the company. So I'm kind of getting into a lot of details here, so I won't go much into them. They're seeing some input cost hurt from like aluminum and stuff. But anyway, that's Coca-Cola Consolidated. I'll also give you a quick update on my Roth IRA. I made some major changes in here, and then I'll show you some stocks that I believe are very undervalued right now. And this is my new Roth IRA right here. Not new, but these are the stocks I own in here. I wanted to make the largest holdings BDCs and REITs. And these are high yielding dividend stocks. Main Street Capital pays you a monthly dividend, and it also has some decent stock price appreciation to them. And same with BRX. This is a REIT right here. This is a grocery store focused REIT. And I like the growth of the grocery stores and their triple net leases. So both of these pay unqualified dividends. So I hold them in my Roth IRA. So those dividends, when I receive them, are completely tax free. When if I held them in my taxable account, they would have been taxed at that higher short-term capital gains instead of long-term capital gains with these normal stocks. Like every stock in here, by the way, pays a dividend. This is my dividend growth portfolio. But every stock in here pays a qualified dividend. And with my income, since I make under, 60,000, all my dividends are actually tax-free. I pay 0% tax. Like if I go to here, I just received a dividend from United Rentals, but like this dividend right here, I know it's small, $5.82, but it's completely tax-free. And if 5 years from now, when they've tripled 5x their dividend, all that will be tax-free. I'm really excited about the future of I love dividend growth stocks. So I love dividend growth stocks for my main portfolio. But here in my Roth IRA, of course, like I just said, I own BRX and Main Street Capital. These are high yielding dividend stocks like Brixmor right here. If you look in the middle, they have a 4.5% dividend. So I get 4.5% of my money back tax free with Brixmor. And a Roth IRA is cool as well because in a Roth IRA, you can use it as a first time down payment for a house. If you're a first time house buyer, you can literally just use your Roth IRA as a down payment tax free. And I don't own a house yet, so that's actually such a cool feature. So where I can actually touch that money before I'm 55, which is pretty cool. So I think Brixmor is a cool one. Also, let me quickly go over Main Street Capital. This is a monthly paying high yielding dividend stock that makes so much money. They sometimes pay you twice in 1 month. Like check this out. They made 25 cents, 25 cents, and then they paid a special 30-cent dividend right there because they're making so much money. Because remember, their dividend costs 75 cents a quarter because 25 times 3 is a quarterly because they pay monthly. And look at that. They can easily afford that every quarter. They're making well over 75 cents of EPS every quarter. So that's why they can afford to do those special dividends. So anyway, Main Street Capital, I didn't even show the dividend yield on them. They have like a 6% dividend yield, and it's even higher when you include the special dividends. So anyway, Main Street Capital, that's a BDC, business development company. Both of those stocks, Brixmor and Main Street Capital, literally by law have to pay up most of the income they make in the form of a dividend. So those high yields that they have are actually sustainable. We also had some news come out 2-3 days ago that Trump wants to fast track getting up the nuclear energy reactors. And Constellation Energy, this is the company that owns the 3 Mile Island nuclear reactor. And they're about to restart the 3 Mile Island reactor. And it literally just powers one Microsoft data center. And so they're about to speed track that. They're also about to acquire a company. They're about to acquire a company, and it's instantly accretive, $2 of yearly EPS. So that's 50 cents of EPS every quarter from now on that they're going to have, which is great news for Constellation Energy. So anyway, this is a nuclear energy stock. I believe they own 50% of all the U.S. nuclear energy reactors. It's the largest pure play for nuclear energy and geothermal energy, where they harvest the hot steam coming out of the ground from geysers. It's really fascinating. They actually supply 20% of California's green or clean energy from their geothermal reactor that literally just harvests geyser steam in California. So that's pretty cool about Constellation Energy. I think that's why they've rallied so much. Like, look at this. Most of my gains came just from this month. I'm up 47% on the stock, but the stock is up 40% just in 1 month. And that's, mainly from, I believe, the Trump wanting to fast track the nuclear energy facilities. I think right now, I don't remember the exact number. It's like we're at 100 terawatts, and he wants by 2030 to be at 400. So he loves nuclear energy, and that's great news for Constellation Energy because they're the largest nuclear energy play. If we look at OKLO and a lot of the other nuclear stocks like OKLO, look at OKLO right here. They're up 421%, pretty much at an all-time high. This is like a nuclear startup. They don't actually have any revenue yet. I'd stay away from that one. I'd much rather buy a CEG, and I might be biased because I own them. But anyway, I'm really bullish on the nuclear energy sector, and it's tough to buy them now because it is kind of at a high PE, high valuation. But the valuation is going to go instantly lower as soon as they acquire Calpine, and it's instantly $2 accretive to their yearly EPS. So yeah, that's great news. And then today we also had Salesforce report earnings, and I honestly the earnings weren't too amazing, and I think that's why the stock is down. If we look at the revenue, it's up 7.6%. That's not bad. But if we look at the operating cash flow, it was only up 3% from the previous year. So I would have liked to see higher growth of the free cash flow. But they bought back some stock this quarter, which is good. Then what about the net income? So look at that as well. The net income was only up 0.52%. So that means the margin was lower than what it was from a year ago. Yeah, look at that. Salesforce's net margin fell 6%. That's probably why the stock is falling. But I am looking to potentially buy back into Salesforce. I sold out of Salesforce to buy other companies, and I'm thinking about buying back into Salesforce, but I'm a little scared of that slowing growth. But anyway, if you found value in this video, please drop a like for me, and if you leave a comment, I'll reply to every comment. Hope you have a great rest of your day. My name is Nathan Robert. I'm just a college student. None of this is financial advice. I really appreciate you being here, and I'll see you in the next video.